Currencies have given back gains against the US dollar from earlier in the day on the back of the hotter than expected US CPI print. This follows a communication from the Fed chair that additional rate cuts were necessary, which had prompted the big dollar sell-off that was seen from Wednesday's Powell testimony into the Thursday CPI read. But some market participants have taken the uptick in inflation to mean the Fed has lost yet another justification to slash rates, which has forced yield differentials to sway back in the dollar's favor. Still, the dollar is well off where it was into the Wednesday Powell testimony, and the dollar recovery has been more about an adjustment after an already extended shorter-term sell-off. From an FX perspective, the takeaway, in our view, is that if it isn't one reason to be justifying a rate cut, it will be another. If employment data is strong and inflation is ticking up, the Fed will just cite downside risks associated with U.S. administration trade policy and global growth to justify bowing to the will of investors and continuing to promote an already exhausted strategy that hopes to keep the illusion of recovery afloat. Of course, with the dollar rallying back, stocks were falling off on the same worry that higher inflation readings would mean a Fed that would be prevented from cutting rates. But again, at this point in the cycle, even when the Fed does follow through with additional rate cuts, we don't believe investors will be as incentivized to be running into stocks with rates already super depressed and valuations harder to justify. This sets the stage for an overdue capitulation in stocks that could play out in the second half of this year. Our overall outlook and expectation is for an FX market where the US dollar underperforms relative to the major currencies on the U.S. administration's soft dollar policy initiative, and a U.S. and global equity market with limited upside and plenty of downside ahead, with the grand experiment of excessive policy accommodation and government stimulus running its course. That's all for now.